Hello and welcome to Charting the Markets with me, Sean Murison, Senior Market Analyst at IG South Africa. Markets are still reacting or still digesting yesterday's FOMC rates decision. We know there was no increase, so we've paused rates. But the Fed did leave the door open to raise rates later on in the year and really did indicate that rates will not be coming down this year. So markets, bit of a knee-jerk reaction. Today we do have some more central bank activity in the form of the ECB main refinancing rate. We're expecting a 25 basis point increase in that lending rate there. Obviously a key for markets, especially European markets and Euro crosses at this stage. So let's look at some charts, starting off with the dollar. So it all does start with the dollar. We're talking about the long-term trend. Well, the dollar remains down, so the bias is towards dollar weakening. In the short to medium term, however, traders will look at this range-bound type environment at this point in time. And what we do have is we do have some short-term weakening of that dollar, US dollar index at the moment as well. We've now broken that level of support at 103.15. We do have this bit of this double top formation, that double top suggesting that this move higher is now reversing into a short-term move lower. And our target there on the downside is about 102 on the dollar index. Traders who are short and taking the view that expect that market to fall might consider having a stop loss on a close above that 103.15 mark. Looking at the euro dollar, and obviously a lot will depend short-term movement on the guidance from the ECB this afternoon when they do announce their rates and issue that policy statement. But at this point in time, technically, we see we're in an uptrend there. So euro strength against relative dollar weakness. That price is still trading above that 200-day simple moving average. And that suggestion that that long-term trend bias is to the upside. Now, we're finding resistance on this 1.0855 mark. I think to unlock some further gains, we want to see a close above that mark. So if we get a close above that, we'd consider that an upside breakout. And we'd start targeting a move back to about, I haven't labeled on the chart here, but I think initial resistance there about 1.058. And if we get through there, 1.1065. That move is cautioned because we are starting to trade in overbought territory on the euro dollar, but overbought is deemed as less important or having less weight than that longer term uptrend. So that longer term uptrend is in place. I think if you're not really long, you might want to wait for a breakout, or in the event that we do pull back from overbought territory, wait for that price just to settle. Hopefully we're going to have the price just ticking back, a bullish candle reversal around that 1.0685 mark to look for long entry. But biases to the upside, we're looking for either upside breakout or in the event of a pullback, a reversal off that 1.0685 level. Only if we start trading below that, we say, oh, maybe that longer term trend is broken, and then we can change our bias to trades on the euro dollar. Now, cable is in a similar picture. We are in an uptrend. So the price of cable, that uptrend suggesting continued pound strength with relative dollar weakness. You see that price trading above that 200-day simple moving average, just a gauge of that longer term trend bias. In the short term, we had quite a bit of a strong rally here. We're testing resistance at 1.2665 mark. Again, similar principle to what we saw on the euro dollar. I think if you're looking for new long entries, if you weren't already along, you want to see the break of that resistance before opening up a move, possibly to 1.2965 level. Or if we do start to pull back from overbought territory, looking for the price just to find support at one of these lower levels, 1.2543. If we break below that, maybe even 1.2343. We're just going to see the price pulling back. And if it does pull back, just ticking back to say, oh, that pullback has ended, and possible that we could find long entry into the pound against the US dollar or cable. So again, looking for either an upside break for new positions, or in the event of a pullback, not betting on the pullback, but rather waiting for that weakness to play out and end before looking for long entry on cable as well. Now, moving over to some indices now, and starting off with, I think it's quite a relevant chart right now, which is the volatility index. So price derived from the CBOE VIX index, which is also called the fear gauge. When we see this indicator falling, it's a suggestion that it's a risk-on market environment. But it is quite cyclical. Now, all the other charts that we're looking at today are daily charts, but this is a weekly chart just to show how oversold this volatility index is at this point in time. Now, volatility is a cyclical indicator, so periods of low volatility are generally a precursor to high volatility. And we are now trading at levels not seen since basically before, market reacted and showed fear from the COVID pandemic. So we're going back to levels not seen since February 2020. While it might not be ready yet, as this price is falling, we want to see just some indication that the price is ticking back. So a bit of a bullish candle reversal. And that's really what a lot of these candlestick reversals are showing us. The price has been falling and now it's just started to change direction. Just a little uptick if we were to change it to a line graph. We don't have that yet. And we are testing 16, but certainly somewhere between 16 and the next level of support, 14. If we do get a tick back there, we would be looking at taking a long on volatility, long on the VIX index, expecting at least just a very short-term spike in markets. Trends are up in markets, but we are starting to look a little bit overheated. So if you look at something like the S&P 500, certainly not looking at trading against the trend, but we are acknowledging that markets have run a little bit far, and it would be preferable maybe to find a long entry into a bit of weakness rather than chasing those markets higher. Now what we see on the S&P 500, we've got these three trend lines here, the dotted trend lines on the chart, and you can see that they're getting progressively steeper. And that shows you that the trend has been accelerated. In technical analysis, though, when we see that those three steeper lines there, it's what we call a price blow-off, and a suggestion that that market is really overbought or really overheated at this point in time. We can see that on that stochastic indicator as well. Now, it's not an indication to trade against that prevailing trend, but it is a warning that we could have at least a sideways consolidation as a correction or a pullback into that market. For us, if we're not already long, I think it would be trailing a stop point for exit. If you are already long, if you're not already long, I'd be looking for a pullback to one of our support levels to find long entry into that particular market. Do you have a longer term upside target there of 4,510 for the S&P 500 or US 500 as it's labeled on our chart? But for new entries, we'd like to see a pullback to at the very least that 4,300 mark. Even in a deeper correction towards 4,175 would still be considered viable, provided you see that price pulling back and then just ending that pullback with a tick up. We see this daylight, price is trading very far above that 200-day simple moving average, suggesting that that longer-term trend is still firmly up, but maybe just needs to catch a bit of a breather before it is continued. I think a short-term correction would be healthier for longer-term gains on that S&P 500. Now the DAX, we don't quite see that same accelerating trend, but where the S&P is still quite away from its all-time highs, we do see the DAX now testing those all-time highs and in overbought territory. So we've talked about a short-term range, which has been in place while that longer-term trend is up. For new entries, you want to see the break of that all-time high, that 16,330, or a pullback towards support, that's 15,715 mark. Now, for me, because we are in all-time high, I do like to buy the first pullback from each new high. So if we do get into that new high territory, probably wouldn't be looking at trading that initial breakout, but waiting for the first bit of weakness to follow for that. If we do get weakness from here, that might be an opportunity as well in terms of finding entry into the DAX. Certainly not trying to pick a top, not trying to short a top on the DAX or take a view that we expect the market to fall, but rather looking for where we can join the longer-term uptrend on the Germany 40. Now, FTSE 100 has been quite a frustrating chart over the last little bit. We can see the price has been whipsawing through that 200-day simple moving average. Again, the blue line on our chart. When we see that happening, it's saying, well, that market is not really directional at this point in time. It's moving in a sideways fashion. You can even see it in the very short term. We see these small-bodied candles. So that's just showing you a lot of indecision at current levels. We don't have momentum either to the upside or to the downside. We have a short-term consolidation, so a short-term sideways movement on the FTSE, but we also have a longer-term sideways movement. How we handle that from a trading point of view, which is what we're looking at here, is looking at trading between those levels. So, the short-term range trading between those levels would be 7,560 towards 7,650. Alternative breaks of those levels. So a move below 7,560 would be considered bearish. So consider some short-term downside for the FTSE. Then we start looking towards our lower level of support, 7,410 as a possible downside target. I think if you want to see some strong momentum to the upside, you've got quite some way to go on that FTSE. If you're looking for longer-term gains there, You want to see some momentum to the upside. You want to see the price trading above this trend line here, our dotted trend line, this dotted resistance line. And even in that situation, we've got quite a close level of resistance, 7,700. To unlock real gains, we need to see a move above that level as well. And then we can start looking at 7,800, 7,870 longer term on the upside. But for now, we are in a grind on the FTSE 100. We do lack directional momentum on that index. Right, moving over to some commodities, starting off with Brent crude. And here last, there was quite a, this wedge has played out quite well. So this pattern here, this wedge pattern, this rising wedge was suggesting a short-term continuation on the way down. We had that, we had a rally up, we retested that level, and then we've fallen again. There's a very definite range that has formed now, and that's between levels 72.20 and 78.50. Now, for us, we recognize that we got a bullish reversal off that support, suggesting a bit of a rebound in Brent crude. But because the price is trading firmly below that 200-day simple moving average, we are not really comfortable taking long positions on crude until we see a break of that longer-term downtrend. So what we are doing is we're looking for short positions into any type of rebound. It's been a successful approach for quite a while right now, over the last little bit, and we're looking for a bearish reversal into this rebound off that 78.50 mark. Now, another short entry type scenario might be a close below that 72.20 support level, which is not far away at this point in time, in which case we start targeting 69.50 on the downside. Now, on the downside break scenario, that becomes a little bit trickier in terms of trading as to where to put your stop loss, which could track above a 1 or 2 day high, depending on how sharp that breakout. A long breakout might increase the risk relative to the expected reward of the trade, but that would need to be assessed if that does happen. But for now, we look like we've started a bit of a rebound off support, not quite oversold territory, and we're waiting for that rebound to play out before looking for short entry into a bearish price reversal. Now, gold is really testing support. But long-term trend for gold, the bias is to the upside still for gold. We've priced still trading firmly above that 200-day simple moving average, but in the short term, we've been consolidating, and we could possibly be extending that pullback lower as we move below this 1945 support level. Now, price is currently trading below that. If it does close sharply below that, next level of support is quite some way down, probably sitting at about $1,875 per ounce. Now, we wouldn't be looking at shorting that because of our view that that longer-term trend bias is still to the upside. And so we'd wait for weakness to play out, and we're looking for hopefully a reversal above this 200-day simple moving average and this 1875 level for long entry. Alternatively, today's price action is not complete. We don't have a downside breakout. Well, it depends on your metrics. For me, I like to look at the price settling below that, so I close below that level. And there's still a lot of the day to go. So we could rally up and we could close sharply above that. And maybe that enters a short-term range trade scenario where you start trading between levels 1945, or you start looking for long entry, targeting a move to 1980. You really need to get above that 1980 to see some sharper momentum to the upside on that. But short term, as the picture stands right now, we're looking like we could have a downside breakout, and there is a bit of daylight towards that next level of support at 1875. Now, we start trading below that. That's when we start to consider, well, this longer term trend is now broken, and we change our bias to, or at least reassess our bias to trades on gold. All right, last but not least, looking at copper. Copper considered to be a leading indicator of economic health, and we are rebounding at this point in time. Now, again, we have that situation where the price is whipsawing back and forth through that 200-day simple moving average, and that move up and down through that suggests that copper is actually moving sideways at this point in time. Now, there was a little bit of this rebound here. It's coupled with some Chinese data, some Chinese making short-term borrowing costs much easier. It's trying to stimulate their market a little bit. Now, obviously, China, major consumer of copper. So we have this move lower. We have almost like a little bit of an inverse head and shoulders, and we've broken resistance here at $8,430 per metric ton, and that does target a move back up to 8,710. Obviously, copper, to capitalize on copper, you could trade the copper price, but also obviously a lot of these underlying miners of that, the Glencores of this world, South 32s, the Rios, BHP Group's number of mining shares obviously benefit from a rising copper price. All right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa. Thanks for watching.